Okay, let me know if you guys can hear me okay. Okay. What's up? Is the audio good? Is the microphone okay or is it like echoing? So this is gonna start here in a few seconds, guys. Actually, a couple minutes. So 2 minutes. Is the audio okay? Little low? Okay. Um, 1 minute, yeah. So what we're gonna do, I have the countdown right here, 1 minute 20 seconds left, but what we're gonna do is just have it playing right here, and we're gonna watch. I mean, look at this already, guys. We've seen Bitcoin just shoot up and right back down already. Interested to see how this plays out. Usually right until the meeting, we do see a huge jump in price and then a correction, but it looks like that's already happened here, but nothing too crazy, just right up here to support our resistance at 20.5. So I just want to make sure, okay, the stream here, the audio, can you guys hear this okay? You guys hear that? Let me know if that's too loud or if that's okay. Yeah, it's been moving crazy. Can you guys hear the Federal Bank Reserve Government website stream? Good sound? Okay. I'm gonna stop it right now because that's annoying. Yeah, no, that's just the music they play. Don't worry. I'm gonna leave it muted for now. But yeah, if you guys didn't watch the video I made earlier, usually, basically 5 out of the 6 times we've seen the rate hikes, we don't necessarily see an exact correlation with Bitcoin price, to be honest with you. I mean, we do end up seeing a dump shortly after, but what's really clear is that we definitely do see a pump in the DXY. The US dollar gets stronger, guys, every time that we see a rate hike. Every single time we can see that the DXY tends to push up, and we know what that means for Bitcoin. So if you guys actually notice, we're forming this kind of falling wedge here. This is very bullish for the DXY. So this could be the start of the collapse here. And if you guys also notice, S&P, the stock market, looks like we've peaked out. Oh, too loud? Sorry. Shit. I want to make sure it's okay. Is that okay? Or is it? I don't want it to be too low either. But yeah, it looks like the S&P has started to peak out over here. Let's see if they've started. Not yet. Are they running late? They're actually late, guys. They're 1 minute late. Correct? Or am I wrong? Yeah, they're late. So we'll just continue waiting. But yeah, I mean, it's really clear here, guys. I think that we're gonna start to see a little bit. Oh, guys, look at this price action right now. Look at this. Are you guys seeing this? This is insane. Look at this. So as I told you guys, I have a short order set up here. I have multiple short orders, guys. That's my strategy here. I have a bunch of short orders set, and if I get stopped out, that's fine. I have one above. Look at ETH. Let's look at ETH. Holy shit. This is crazy, guys. As expected, huge pump right before the meeting, guys. This happens every time. We expected this. Yeah. So that's why I have a short position for ETH as well at 1700, but I have a bunch of shorts for Bitcoin 21.6 and even above 22. And yeah, This is what we expected though, guys. Usually right before the meeting, you can see just price go up crazy. And you can be damn sure that this is going to correct back down. So look at this. I mean, we're just pumping, guys. We're pumping huge right now. Crazy, right? This always happens. Wow, they're still late. They're late, guys. What's going on here? Okay, so let's just continue watching Bitcoin then, because this is crazy right now, guys. Crazy price movement right now for Bitcoin, guys. Again, I don't necessarily expect price to go too far unless we hear some good news here, which I still don't think is likely, guys. Yeah, it's crazy. I mean, we've already seen, yeah, look at Ethereum just trying to clear its resistance over here. Right before every meeting, guys, we see this huge move, huge run up. But definitely not a bad idea if you guys would like to enter a short entry. This is going to come back down shortly here. You'll see. Very shortly. Let's see. How is this not started yet? Well, they are late. Let me refresh. Maybe it's my fault. I don't think so, though. They're taking quite a bit here. You guys seeing that price action? It's crazy, right? Sorry, that was really loud, my bad. Okay, we're just gonna wait for them to start. But yeah, this is crazy. So Ethereum trying to break above this 1600 level again, guys. Meanwhile, Bitcoin. Look at these huge wicks, guys. Huge wicks. We've seen Bitcoin in just, 3 minutes go all the way down to 20.1, shoot right back up to 20.8, guys. Crazy, right? Where would I enter short on ETH? Let me take a look because most of my orders are set for Bitcoin, but let's take a look here. So for ETH, honestly, I don't think it's a bad position to enter a short here around 1600. Not at all. Put your stop loss right up here at the local high around 1610. That's not a bad place to put it. Oh, it's up? Okay, they're going. They started? Are you sure? Why isn't it showing then here? November 2nd, 2022. What's the problem? Check Forex Factory. Alright, I'll do that right now. My bad. Sorry guys, I usually use the government website, which works fine. Forex Factory. Okay. Okay, you know what? Is it already up on YouTube? Let's check that. If it's already up on YouTube, that would be way easier, to be honest. Very strange they're late. Yeah, I mean, that's what I'm thinking. They wouldn't start it somewhere else before starting it on their government website, would they? Oh, yeah, guys. This still hasn't started yet. Live? Let's see. Just let me know if you guys can hear the audio well for the press conference audio. Just want to make sure. That's really important. Pay attention, guys, to the words he uses, okay? Pay attention. Not yet, guys. There's no way. It's not live on YouTube, and it's not live on the federal government website. But what's very important here, guys, is before this starts, pay attention to the wording he uses. Pay attention to how he says certain things. Pay attention to the questions reporters ask him, We want to see if he's, switching his stance maybe a little bit, or if he's still very hawkish. That's what we want to make sure of. But this is very odd, guys. I would have expected them to be on time with these type of things. How is that possible? So it's already started? 2:30, yeah, exactly. It's already I mean, I have a countdown tool right here, guys. I have a countdown right here. So you can see it already should have started by now. So that's really odd. We can just sit and wait here. I mean, the fact that price action has already been going crazy, that just shows you that they are late. Look at this, Ethereum breaking 1600. Ethereum has broken 1600, guys. Bitcoin trying to push above that 20.7 level again right here, that key area. Let me drag this out for us right there. So I have short entries all the way up to even 22K, guys. Yeah, it says it's at 2:30 or 6:30 my time. It should have already started, bro. Right here. Should have already started. So I have no idea what's going on here. We can just wait. Let's try. Let's just try the Federal Reserve website again. Not really sure why this is happening. Very weird, guys. Nothing yet. Have you guys seen anything, like any news online, anything claiming that this thing is about to start, or they're late, or what's going on here? You know what's funny is price is going insane right now. Insane. So we've now reached this area, peak area of trading volume. And we're just gonna sit here and watch it. I guess we'll watch price until this starts, guys. It'll start. They're not gonna just completely not broadcast, but I guess we'll just sit here and watch this for now. This is crazy. I guarantee you guys what happens here is the minute the announcement begins, you start to see price drop back down aggressively. Usually that's how this goes. But these wicks are insane. I mean, if we were to go to the 30-minute time frame, guys, crazy, right? Crazy. This always happens. Okay. Let's check again. There's no way. Like, this is a bad look. This is bad for the federal bank, to be honest. This looks bad. Do you guys have any update or maybe any news, anything going on with why this is being so late? Very weird. I'm just gonna wait for it to start, to be honest, but we're already seeing crazy price action. It's out 4%. Look at Forex Factory. I understand it's out, but I'm not just worried about the rate itself. I want to understand what he has to say, the questions he answers. Forex Factory already announced figures. No, we already knew the figures. 75 basis points to be expected, right? But the statement is what I'm really want to listen to and hear how he speaks. Because I understand that some figures have been released. Inflation risks, job gains are robust, and unemployment has remained low. So are you guys saying that they've already went live on Forex Factory, or no, the broadcast hasn't started? Because if it has started, send me the link. That's very odd. They are usually right on time with these. They having trouble with OBS. Yeah, they didn't set up OBS right. No, I mean seriously, they're usually right on time, to be honest. Every single time. What's going on with Bitcoin? So honestly, this wasn't a bad short entry either, 20.7. That was the next area of volume right here, you can see. It looks like the markets are just kind of in a free-for-all right now, just going crazy, right? ETH rejected off 1600. Why? Okay, so 13,000 people are watching, but nothing's going on. Let's check. Nope. Nothing. Nothing at all. So you're saying that the figures have already been released? I guess we're just going to continue to see. I mean, it looks like price is starting to settle down just a little bit, but not a bad place to enter a short. In the meantime, guys, while we wait, I suppose, I don't like doing this, but if you guys could just share the stream or send it to whoever's interested, whoever wants to watch this with us. Just waiting for the announcement to happen. That's just so weird. Still nothing. Still nothing. So are they, at this point, are they just going to start it later? What's going on here? Bitcoin having trouble clearing that 20.7K area. Let's take a look at the DXY, guys. Oh, DXY coming down, actually. I still expect once they begin to speak and go over details and forecasts that we see this start to pump to the upside. I swear, guys, I'm not like crazy here. This is the federal countdown, FOMC, 0 hours, 0 minutes, 0 seconds. We're just waiting. What can we do? And this is crazy. I mean, so one of my shorts has been triggered now, guys. 20.7. One of my shorts has been triggered on Bitcoin. And I'm going to let that play out. I wonder if this is just... That's so crazy, guys. Never happened before. Never happened before. In the meantime, I guess we can just take a look. That's interesting. Okay, so S&P has caught a little bit of a bounce up. I'm still expecting S&P to start retracing, guys, all the way back down. That's really what I'm expecting here. If you guys didn't see the last video, I basically just went over every single rate hike and the effect it's had on Bitcoin, and it's pretty obvious what you can see here. Pretty clear. But we're going to watch for the DXY to break out of this flag, guys, because this is actually scary, guys. For those of you that don't know, the DXY breaks to the upside. Crypto, stock market goes to the downside. And the price target of this breakout would put the DXY at 115 points, which is huge. Any updates, guys? Have you guys seen anything? Anything on social media? Maybe people wondering what's going on here? I mean, this is hilarious. Can't be good news. You know who always has the truth, guys? You know who always gets to the bottom of things? Twitter. The almighty Twitter. So why don't we take a look at what people on Twitter are saying, because I can always trust Twitter to give me some feedback, some honest feedback of what's going on here. Bitcoin here is trying to break above 20.7 again. Okay. I don't really see Bitcoin coming up to 21.3, 21.5K zone, but this is what we have to watch for now, guys. Then we can worry about this. Okay. 20.7. Just let me know if you guys see anything or some type of announcement that there's going to be a delay. Let me know, because this has never happened before. Interesting. Maybe they didn't set up OBS correctly. That's only me. Only I could make that mistake. So yeah, I mean, everything on Twitter, guys, it looks like things are going to continue as normal, business as usual. So I don't know. I don't know exactly what's going on here. I'd be really surprised if they canceled this thing. If they just decided we're not going to do a broadcast, but I still don't think so. Probably some technical difficulties. So apparently, yeah, so Fed raised interest rates by another 75 basis points, 4%, okay? Committed to lowering inflation to 2%. So we can still expect that there's not going to be a pivot here, guys, for a while. Maybe all the way into 2023, second quarter. That makes sense. This is crazy. I just want to hear Jerome Powell speak, guys. That's all I want. I just want to hear what he has to say. Alright. I'm just going to wait then. I'm going to give it another 10-15 minutes and watch price. We'll watch the price. Still having a hard time clearing this zone, guys. Honestly, not a bad entry right now to short this. Not bad at all. Because we know if they do start this broadcast now, we have the info. We know he's going to be hawkish. We know he's going to say that we're still fighting inflation. We're still having issues. You know, we have some job data. We have some manufacturing data. Maybe not the best right now. So we're still... US is still in trouble. Markets are still in trouble. So not a bad entry point for a short here. Not at all. Stop loss, 20... You could put it at 21K. 20.9. That's not bad. You know, even if price were just to correct back down to where we were, you're still talking a good 2% move. 5x leverage, there you go, 10% profit. Not a bad entry at all. So, that's so weird. Very interesting though. They moved timings to 6:30? So in 4 hours, are you sure? Wow. You guys, it's like 10, 11 at night here in Dubai. So do I have to do this at like 2 a.m.? I don't want to do that. So let's just try to verify that, because if that's the case, then yeah, ETH pushed up to 1620. I saw that, yeah. Okay, I mean, let's check. Let's just make sure that it was moved to 6:30, because I would hate to cancel the stream and then immediately it starts. So let's just make sure. Let's check. I fixed my camera finally, guys, so it's at the right angle so I don't look suspicious. No, it's in 10 minutes? Okay, it's in 10 minutes for sure. Who told you that? Apparently, it's in 0 minutes. No, I'm just kidding, but yeah. All I want to do is just hear what he has to say. 6:30 my time, so what does that mean exactly? Okay, 9 minutes. It's in 9 minutes. Okay, that's not bad. That's fine. We can wait 9 minutes, right? We can definitely wait 9 minutes. That's fine. We can just watch price until that 9 more minutes. So what exactly do you guys think? Do you guys think that I already knew for a fact that we would pump up pre-meeting because that always happens, but do you guys expect that now that we already knew what was probably going to happen, but do you guys expect that price starts to rally, or do you guys think that we get a huge correction here shortly? I'm not doing cocaine. Stop doing cocaine. You can see me, bro. You can see me. My camera's set up the right way finally, so you can see. That's fine. We're just gonna chill here and wait. It's 9 more minutes. That's not a big deal. Check Forex Factory. I did check Forex Factory. There's no live stream. There's nothing going on. I checked, like, I know the info. I already got the info, but I want to see the stream. That's what I'm interested in, you know? It's all about the way he talks, guys. Pay attention to the way he says things. Pay attention to the reporters, the bloodthirsty reporters asking him, begging him for answers. The way he answers, the way he goes about certain topics, that's important. It's really interesting. Just the way he talks could cause price to dump or pump. It's crazy. But I understand that we know it's going to be 75 basis points and interest rates are still, inflation is still on the rise, so. So, I mean, I think that when he begins to speak is when we're going to see the price correct back down, guys. But to be honest with you, I was definitely expecting to recover all this price action, guys. All these gains we've had in the past couple of weeks, I was expecting those to be recovered back down. That's still what I'm expecting here. It may not happen right now. Could happen tomorrow, as we've seen before. Yeah, I did. I checked Forex Factory, yeah. I don't see too much going on there, to be honest. Don't see much going on. Let's take a look at Ethereum, though. 1610. Wow. Okay. Okay, then. So, essentially, I don't see much resistance up until 1640 if it can break past this zone. Not a bad place to short. Not at all. Looks good. Let's check here. Anything? Nothing? Nothing new? You guys said 9 minutes. It's 10:24 now, so 6 more minutes. Okay. Yeah, this is crazy, guys. So we saw Ethereum basically 6% top to bottom, 6% move, guys. Crazy. Crazy. S&P as well, a little bit of volatility, but still expecting this to correct. DXY must have come down a good bit. Yep. Still looking for DXY to bounce off of here, though. This is bullish. This is bullish, to be honest. Yeah, I mean, basically just a lot of people got stopped out here, I'm sure. But not a bad place to short right now, yeah. My short definitely has been triggered at this point. Definitely. So, I'll get stopped out somewhere around here. We'll just chill and wait then. 4 more minutes, we'll see. We'll just relax here for a bit. We'll have to wait a bit. I still don't know. It looks like Bitcoin has found some good resistance right here. There is still the off chance that we see this breakout, this flag up into this zone, but it looks like it's just going to continue, guys. So what do you guys think? Do you guys think next FOMC meeting 50 basis points or another 75? That's the type of info that we're going to get here once he starts to speak. That's what I'm interested to really hear. Ethereum trying to run up again. 1613. Let's see here. I'm still expecting, guys, something like this just to distribute back down, and we end up back here. And the reason I say that, someone keeps saying check for. I checked Forex Factor, yeah. I don't see much. So for Ethereum, looks like this is a great short opportunity. I still think we end up respecting this channel, guys. I do. I don't think we're in some huge trend reversal, groundbreaking reversal, and this is the start of the bull run. I don't believe that at all, to be honest. I don't. That's crazy though. Ethereum has sure done a huge move here. 6%. Ethereum has been moving much more aggressively and faster than Bitcoin, which is interesting. It's been kind of behaving on its own. Well, let's see here. Should be starting now, no? I hate this. I hate this music. Let's just chill here a couple more minutes, it looks like. You guys can see behind me there's like some type of festival going on here in Dubai, like some parade or some shit. I don't really know, to be honest. It's annoying though, it's really loud at night. A lot of music and bullshit. So this resistance has really proven to be an important point, guys. You can see right there. Struggling exactly right on the line, right on the dot. Crazy. 20.73. Okay, so are we good to go or no? It's already okay. Here we go, guys. Let's go. Let's listen. Just make sure. Tell me if you guys can hear everything good. Yeah, it's up. It's here. I just don't want it to be super loud and fuck your ears up. I'm trying to make it. Is that? Oh, don't do this now. You know what? Let's just do this then. Let's go to YouTube. Yeah, it is up. It started. We're just gonna listen on YouTube, but they haven't like started speaking yet. Give me a sponsorship, Coca-Cola. Okay. It's up, yeah, I know. They haven't started like talking yet, but it is up, yes. Just wanted to go to YouTube, it's better. Here we go.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate.
You can't hear it? What do you mean?
We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation.
How can you not hear it? It's very loud.
The process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance of policy for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments.
Pay attention to how he talks.
The U.S. economy has slowed significantly from last year's rapid pace. Real GDP rose at a pace of 2.6% last quarter, but is unchanged so far this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions.
Okay.
Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates.
Housing, that's important.
Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August
Guys,
and
watch.
September.
Price is about to come right back down. Watch.
Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on inflation.
Okay, he mentions Russia.
Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time.
So same tone as usual, guys.
Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation.
You mentioned housing quite a bit.
At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal.
This is what we need to know.
There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go. And incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected.
Wow.
Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. We will
at
continue to
that.
make our decisions meeting by meeting and communicate our thinking as clearly as possible.
Price is gonna start coming back down,
We're taking
guys.
forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions.
He's gonna talk
Restoring
about
price
some
stability
job
is
market.
essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done.
Yeah.
To
Same
conclude,
tone.
we understand that our actions affect
just wanna hear
communities,
what the
families, and
reporter's
businesses
asking,
across the
guys.
country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Guys, price might dump today or tomorrow, guys. Huge.
Thank you. Colby
let's
Smith
see
with the
what-
Financial Times. On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting? Or is that something that the Fed could potentially proceed with independent of that data, given the lagged effects that you mentioned?
So a couple things on that. We do need to see inflation coming down decisively, and good evidence of
Price is
that would be
coming back down.
a series of down monthly readings. Of course, that's what we'd all love to see, but I've never thought of that as the appropriate test for slowing the pace of increases or
Yeah.
for identifying the appropriately restrictive level that we're aiming for. We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective over the medium term. How will we know that we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned. We will be looking at real rates, for example, all across the yield curve and all other financial conditions, and as we make that assessment.
Hi, Howard Schneider with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
No pivot.
So,
No pivot, guys.
What I want to do is put that question of pace in the context of our broader tightening program, if I may, and hit to talk about the statement language along
gonna
the way.
skirt around
So
each
I think you can
question.
think about our tightening program as really addressing three questions. The first of which was and has been how fast to go. The second is how high to raise our policy rate, and the third will be eventually how long to remain at a restrictive level. So. On the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3.75% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate, given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate, and we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time, and we put that into our post-meeting statement because that really does become the important question we think now is how far to go, and I'll talk more about that. We think there's some ground to cover but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought at the time of the September meeting. That level is very uncertain, though, and I would say, we're going to find it over time. Of course, with the lags between policy and
Guys, he
economic
just
activity,
foreshadowed possible
uncertainty.
higher rates
So we note that
in the December meeting, guys. This is not good.
Will take into
Not
account
good.
the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last two press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming, And it may come as soon as the next meeting or the one after that. No decision has been made. It is likely we'll have a discussion about this at the next meeting, a discussion. To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restricted,
Yep.
which really will be our principal
Still
focus.
very hawkish,
If I could
guys.
follow up on that, to what
Very
degree
hawkish.
was there an importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else, dealing with their own stress?
So
as a result?
67% of you
Well,
agree.
I think I'm pleased that we have moved as fast as we have. I
Yes.
don't think we've over-tightened. I think there's very difficult to make a case
Lou
that
Yang
our
is
current
right.
level is too tight, given that inflation still runs well above the federal funds rate. So I think that at this meeting, the last two meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean. And we did discuss this, and as I mentioned, we'll discuss it again in December. But there's I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember,
agree
though,
with Lou Yang.
that we still think there's a need for ongoing rate increases, and we have some ground left to cover here, and cover it we will.
Yeah. So still very hawkish, guys. This is not optimistic feedback,
Nick
This is-
Tamarosa, The Wall Street Journal. Chair Powell, core PCE inflation on a 3 or 6 month annualized basis and on a 12-month basis has been running in the high fours, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
welcome to the stream.
So this is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would think you'd look more at a forward, a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight on that. You also put some weight on rates across the curve. Very few people borrow at the short end at the federal funds rate, for example. So households and businesses, if they're very meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher, and I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the
More
single
quantitative
dominant
tightening,
thing.
guys. More tightening.
If I could follow up.
More expensive to
What is your
borrow.
best assessment or
Less
the staff's
mortgages,
best
less
assessment
people
right now
buying
of the
homes.
current rate of underlying inflation?
I don't have a specific number for you there. So there are many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level, for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what the principal models would tend to say. But I wouldn't want to land on any one assessment. There are many different.
He's going to
as you know,
manipulate
many
kind of
different,
his way
people
around the
publish an
questions, guys,
assessment
but
of underlying
I still
inflation.
want to hear what he has to say about certain things. I want to hear what he has to say
Hi, Chair
about
Powell. Thank you for taking our questions.
homes
Gina
and the
Smilik,
job
New York
markets.
Times. I wonder, do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
Is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw longer-term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data. Shorter-term inflation expectations moved up between the last meeting and this meeting, and we don't think those are as indicative, but they may be important in the wage-setting process. There's a school of thought that believes that. So that's very concerning. I guess the other thing I would say is that the longer we have, we're now 18 months into this episode of high inflation, And we don't have, a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so, the thing we need to do from a risk management standpoint is to use our tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to
He
do.
sounds
and what
even
we're
less
strongly
optimistic
committed to
than the
doing.
last meeting, guys. So this says a lot.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. The statement points to the lag times. I'm wondering if you can walk us through how you judge those lag effects, what that timeline looks like over the coming months or even a year, and where you would expect it to show up in different parts of the economy.
Yeah, so the way I would think about that is it's a commonly, for a long time, thought that monetary policy works with long and variable lags, and that it works first on financial conditions and then on economic activity, and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly long. There's newer literature that says that they're shorter. And, the truth is we don't have a lot of data of inflation of this high in what is now the modern economy. One big difference now is that it used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation. Now, financial conditions react well before, in expectation of monetary policy. That's the way it has moved for a quarter of a century, is in the direction of financial conditions, then monetary policy, because the markets are thinking what is the central bank going to do. And there are plenty of economists that also think that once
it looks like we could
financial
see
conditions
even
change, that
100
the effects
basis
on the
points
economy are actually faster than
next
they would have
meeting,
been
guys.
before. We
100
don't know
basis
that.
points.
I guess the thing that I would say
That's
is
what
it's
I'm
highly
getting from
uncertain,
this, 'cause
highly uncertain. And
he
so
wanted to make people
from a risk
comfortable with
management
the
standpoint,
idea
we do
of a
need it would be
higher rate hike.
irresponsible not to ignore
So
them.
that says a lot.
But you want to consider them, but not take them literally. So I think it's a very difficult place to be, but I would tend to want to be in the middle, looking carefully at what's actually happening with the economy, and trying to make good decisions from a risk management standpoint.
70,000 people
Remembering,
watching.
of course, that if we were to over-tighten, we could then use our tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon.
And if I could follow up, should we interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
So I think as we move now into restrictive territory, as we make these ongoing rate hikes and policy becomes more restrictive, it'll be appropriate now to be thinking more about lag. Of course, we think about the lags are just sort of a basic part of monetary policy, but we will be thinking about them. But we won't be, I think we'll be considering them, but because it's appropriate to do so. Let me say this,
Check charts, yeah.
it is very premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view,
Just wanna pull it up
think
on a
about or
shorter
be talking
timeframe.
about pausing our rate hike. We have a ways to go. Our policy, we need ongoing rate hikes to get to that level of sufficiently restrictive. And we don't, of course, we don't really know exactly where that is. We have a sense, and we'll write down in September,
So it's
in the
pushed-
December
it's
meeting,
pushed up,
a new
settling
summary
around
of economic
25.3.
projections, which updates that. But I would expect us to continue to update it based on what we're seeing with incoming data.
Thanks, Chair Powell. Neil Irwin with Axios. As you look around the economy, the clearest impact of your tightening so far has been on housing, maybe some venture-funded tech companies. It's been relatively narrow in terms of the labor market, consumer demand, a lot of sectors. You don't see a ton of effect. Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you at all worried
Huge wicks.
that you're crimping
Huge.
housing supply in ways that might cause problems down the
Huge
road?
wicks.
I don't know that the channels through which policy works have changed that much. I would say a big channel is the labor market, and the labor market is very, very strong, very strong. And households, of course, have have strong balance
Yeah,
sheets.
they.
So we go into this
these
with
reporters
how-
tend to
with-
want to
with,
ask too much.
a strong labor
But I
market
respect
and
it.
excess demand in the labor market, as you can see through
At
many
least they're
different
trying
things.
to
And
get some
also,
information here for
with
the
households
people.
who have strong
This is
spending
important
power
shit, I mean,
built up.
this
So
matters.
it may take time. It may take resolve. It may take
But-
patience. It's likely to get inflation down. It may.
Looks like
I think
price has
you
settled
see
down
from
a
our
little, guys.
forecasts and others that it will take some time for inflation to come down. It'll take time. We think. So, sorry, was I getting to your question there? Oh, housing, the housing part of it. Yeah, so, we look at housing, of course, housing is significantly affected by these higher rates, which are really back where they
Lou
were before the
Yang,
global
yeah,
financial
that's
crisis.
exactly
They're not
what he meant.
historically high, but they're much higher than they've been.
Exactly.
And you're seeing housing activity decline.
That's
and you're
exactly
seeing
what they're
housing
doing here
prices
too. They know
growing at a
exactly
faster
what they're
rate,
doing, guys.
and
When
in
they
some
leak
parts of the country,
information or
declining.
make an announcement, you're right.
I would say the housing market was very overheated for the couple of years after the pandemic.
That's
As
what I
demand
got from it.
increased and rates were low. We all know the stories of how overheated the housing market was, prices going up.
Yeah, Bitcoin
many,
is going to
many
start
bidders,
dumping. Exactly.
No conditions, that kind of thing. So the housing market needs to get back.
So I
into
hope
a
you guys got
balance
that
between
short
supply
entry.
and
Not a
demand.
bad short entry.
We're
20
well
point,
aware of the
20.7,
what's
not
going on
bad.
there. From a financial stability standpoint, we
I may
didn't
take
see in
profits
this
just
cycle
because, but
the kinds of
I'd like to take profits
poor
down
credit
here.
underwriting that we saw before the global financial crisis.
Good short.
Housing credit was very carefully.
I
much
think we
more
see the
carefully
markets
managed
dump though,
by the
guys,
lenders.
a little later.
So it's a very different situation and doesn't present doesn't appear to present financial stability issues. But no, we do understand that's really where a very big effect of our policies is.
We're going to see price probably Asia market, like he said. It's going to take a while,
Hi,
maybe a
Victoria
few
Guido
hours,
with
maybe a day.
Politico. I wanted to ask about the labor market.
This is important too,
You mentioned
guys.
early on again
Labor market.
that job openings are very high compared to available workers. And I'm just curious, to what extent you do and don't draw a signal from that? So, for example, if wage growth is
Bitcoin
slowing
has some
and
support
if
though
maybe
right
the
here,
unemployment
guys,
rate
remember,
starts
but
to tick up,
not
will
sure how
that
strong it
make
is.
you sort of decrease your focus on job openings? What do you see? Are wages what's really important? How are you thinking about the labor market as it relates to inflation?
So we talk a lot about vacancies and the vacancy to unemployed rate, but it's just one. It's just another data series. It's been unusually important in this cycle because it's been so out of line. But so has quits, so have wages. So we look at a very wide range of data on the labor market. So I'd start with unemployment, which is typically the single statistic you would look to, is at a 50-year low, 3.5%. We're getting really nothing in labor supply now. We had, I think, a very small increase this year, which we thought we would get that back. Most analysts thought we would get some labor supply coming in. You mentioned wages, so I guess I would characterize
Appreciate
as
it.
sort of a
Well,
mixed
sometimes,
picture. It's true with average
no
hourly
one can
earnings you
predict the
see.
future,
So
right?
I would call it a flattening
But
out at a level that's
it's a good short entry
well
for
above
sure.
the level that would be consistent over time with 2% inflation, assuming a reasonable productivity. There with the ECI reading this week, again a mixed picture. The headline number was.
We've been waiting for
Let's
this
just say
short for a
it was
while,
high. It didn't show
Lou.
a decline. There's some
We've been waiting for a
rays
while.
of light inside, that if you look at private sector workers, that did come down, that compensation did come down. But overall, though, the broader picture is of an overheated labor market where demand substantially exceeds supply. Job creation still exceeds, the sort of the level that
If
would hold
Bitcoin
the
loses
market where it
20.3,
is.
guys, I think that's
So,
where we start to see maybe
that's the picture.
20K
Do we
flat, and that's a
see,
big area to watch.
We keep looking
Huge.
for signs that sort of the beginning of a gradual softening is happening. And maybe that's there, but it's not obvious to me because wages aren't coming down; they're just moving sideways at an elevated level, both ECI and average hourly earnings.
Ethereum now all the way back down to 1550, guys.
We want to see.
That's an even more beautiful short.
Vacancies.
I didn't take
quits
that
coming
one.
down. They are coming down. Vacancies are below their all-time high, but not by as much as
Wow.
we thought because the data series is volatile. We never take any one reading. We always look at two or
Crazy though,
three.
very
So
volatile.
it's a mixed picture. I don't see the case for real softening just yet, but we look at.
So you
I guess
guys hear
I just-
that? He doesn't
as I
see the
just showed
case
you,
for
we look at a
softening
very
just
broad
yet.
range of data on the labor
We
market.
could see a
Do you
75
see wages
or
as
more.
being a significant
next time.
driver of inflation?
I think wages have an effect on inflation, and inflation has an effect on wages. I think that's always been the case. there's always a going back and forth. The question is that really elevated right now? I don't think so. I don't think wages are the principal story of why prices are going up. I don't think that. I also don't think that we see a wage price spiral. But
But
again,
yeah,
it's
that
not
was a good
something you
short
can-
entry right there.
You know, once you see it,
I had entries
you're in
placed way
trouble.
higher
So,
too.
we don't want to see it. We want wages to go up. We just want them to go up at a level that's sustainable and consistent with 2% inflation. And, you know, we do think that given the data that we have, that this labor market can
Watch very
soften
closely, guys, for
without
Bitcoin, though,
having
to
soften
lose
as
this
much as
wedge.
history would indicate through the unemployment channel. It can soften through job openings declining. We think there's room for that, but, you know, we won't know that. That'll be discovered empirically.
Let's hear a couple more questions and then we'll end it in 20,
Thank you so
maybe
much.
10
Kayla
minutes. We'll
Tausche
see.
from CNBC. Earlier last month, the United Nations warned that there could be a global recession if central
We'll have to
banks
see what
didn't
happens.
change course. The new UK Prime Minister warned of a profound economic crisis there. And I'm wondering how the Fed is weighing international developments in light of a very strong economy here in the U.S. that would seem to be bucking those trends.
So, of course, we keep close tabs on economic developments and also geopolitical developments that are relevant to the economy abroad. We're in very frequent
You
contact
could catch
with
a bounce
our,
now that
with
I
our,
think about it.
Foreign counterparts, both
Yeah,
through the
Kareem,
IMF meetings
short
and
order
the
at
regular meetings with central
20.7.
banks that we have, and I have one
I
this
thought I would
weekend,
get triggered way higher than that. I had a
with
stop loss at
many
20.9, but
central bankers. So we're in touch
I'll
with
leave it
all of
open
that.
for now.
So I guess it's clearly a time, difficult time in the global economy. We're seeing, very high inflation in Europe, significantly because of high energy prices related to the war in Ukraine.
I want him to talk a little more about
And,
Russia, guys.
You know, we're seeing China's having issues with the zero COVID policy and, much slower growth than we're used to seeing. So we see those difficulties. The strong dollar is a challenge for some countries.
really
but,
don't know why
you we
no one's
have
asked
and
more
we
about-
We take all of that into account in our models. We
Huge
think about
dump
the spillovers
definitely
and that
in the
sort of
Hong
thing.
Kong stock market
Here in the
tomorrow.
United States, we have a strong economy.
Yeah,
And we have an
I
economy
can see
where
that. I
inflation
think
is
it'll take a
running
little
at
bit of a
5%,
time, a little
core
bit of
PCE
time.
inflation, which is a really good indicator of what's going on.
I just made a
for
video
us,
about
is
that,
the way we see
comparing
it,
how
is-
long
is
it
running at
takes
5.1%
after rate
on a
hikes
12-month
between when we
basis,
see a
and
dump.
Sort of similar to that.
It'll
on
take a little bit
3,
of
6, and
time, but
9-month
it
basis.
could be immediately after
So
the meeting. We don't
We
know.
need to use our tools to get inflation under control. The world's not going to be better off if we fail to do that. That's a task we need to do. Price stability in the United States is a good thing for the global economy over a long period of time. Price stability is the kind of thing that pays dividends for our economy for decades, hopefully. Even though it may be difficult to get it back, getting it back is something that provides value to the people we serve.
But
for
overall, just same
long
sentiment,
run.
guys. Actually, a little even more quantitative tightening that he's referring to. So a little even more strict
Fed
than
has
last
acknowledged
time.
in the past that the tools that you have don't affect things like energy and food prices that stem from some of those conflicts overseas, and they're some of the biggest pain points for consumers. So as you pursue the current path that you've outlined, is there a risk that some of those prices simply don't come down?
So we don't directly affect, for the most part, food and energy prices, but the demand channel does affect them just at the margin. The thing about the United States is that we also have in many other jurisdictions, the principal problem really is energy. In the United States, we also have a demand issue. We've got an imbalance between demand and supply, which you see in many parts of the economy. So our tools are well suited to work on that problem, and that's what we're doing. You're right, though. We don't, the price of oil is set globally, and it's not something we can affect. I think by the actions that we take, though, we help keep, longer-term inflation expectations anchored and keep the public believing in 2% inflation by the things that we do, even in times when energy is part of the story of why inflation is high.
Hi, Chair Powell, Janelle Marte with Bloomberg. So the Fed is facing two more ethics-related incidents with the revision of the financial statements from President Bostic and
Oh, she's giving him some
President Bullard
pressure.
speaking at a
She's
closed event.
pressuring him.
So some senators, like Elizabeth Warren, are saying that this is a sign of greater ethics problems at the Fed. Could you talk
That's-
about what this does to the public's trust in the bank?
She's giving him
and
a
what the
little
Fed
bit of
is doing
pressure here.
to prevent this kind of behavior from becoming common?
Sure. So
Very
you're right.
interesting that
The
she asked
public's
that.
trust is really the Fed's and any central bank's most important asset. And anytime one of us, one of the policymakers violates or falls short of those rules, we do risk undermining that trust. And we take that very seriously. We do. So at the beginning of our meeting yesterday,
Bitcoin
actually,
struggling
we had
at
a committee
20.5,
discussion of
guys.
the full committee on the importance of holding ourselves individually and collectively accountable for knowing and following the high standard that's set out in our existing rules with respect to both personal investment activities and external communications. We've taken a number of steps, and I would just say we do understand how important those issues are. I would say that our new investment program that we have is up now and running, and actually it was through that the problems with President Bostic's disclosures were discovered when he filed his new disclosures. That's, we now have a central group here at the Board of Governors that looks into disclosures and follows them and approves people's disclosures and also all of their trades. Any trade anyone has to make was covered has to be pre-approved. And there's a lag. It has to be pre-approved 45
So do you
days
guys
before
think,
it happens. So
should
there's
we
no
go all
ability
the
to
way
gain
through and
market.
just
So
listen to
it's
the
a really
whole
good system. It
stream
worked
and
here.
listen to all the questions,
And
or no?
I think
What
we
do you
all
guys think? Let
said
me
to
know in
each other
the chat.
yesterday morning, we recommitted to each other and to this institution to hold ourselves to the highest standards and avoid these problems.
Do you have an update on the investigations that are pending?
I don't. So, as you know,
Even if just a couple of you guys want to stay and continue watching and hearing the questions, I'll stay. But let me know in the chat if we should keep going or no.
Bostic to the Inspector General. And once that happens, I don't discuss it with the Inspector General or with anybody. It's just the Inspector General has the ability to do investigations. We don't really have that. So that's what he's doing.
Michael McKee from Bloomberg Television and Radio.
Bitcoin trying to break
Earlier this year, you
20.5.
touted the 3-month bill yield out to 18 months as the yield curve with 100% explanatory power. And you said, quote, if it's inverted, that means the Fed's going to cut, which means the economy is weak. That curve is only 2 basis points away from inversion now. So I'm wondering why you are so confident that you have not over-tightened, particularly given that rates work with a lag.
Well, so we do monitor the near-term forward spread. You're right, and that's been our preferred measure. We think it, just empirically, it dominates the ones that people tend to look at, which is 2s, 10s, and things like that. So it's not inverted, and also you have to look at why things, why the rate curve is doing what it's doing. It can be doing that because it
Do I
affects.
think
it
Ethereum will
expects
hit
cuts or because
1200
it
again?
expects
As
inflation
in,
to
like,
come down. In this
ever,
case,
or
if you're
as
in a
in
situation where the
in the
markets
short term?
are pricing in
I can see
significant declines in
1300.
inflation, that's going to affect the forward curve.
There's so much
yes, we
trading
monitor
volume
it.
at that
You're
zone. There's a
right.
lot of liquidity, Liu.
and,
So I could see it.
That's what I would say.
I could see it.
If I could
My
follow
bottom
up,
price prediction for the
you
very
also
bottom
said,
was around
several
900,
meetings ago that the risk
800
of
for E.
doing too little outweighed the risk of doing too much. Is what you're trying to tell us today is that that risk assessment has changed a little
It's
bit?
possible. I think so. I think we will see that.
Well, what's happened is time has passed and we've raised interest rates by 375 basis points.
And
I would not change a word in that statement, though. I think
I can show you just here, Liu. Even just on the chart, you can tell that there's a lot of liquidity down here back for Ethereum, back around 1300. There's a lot of volume and liquidity to be captured down there. So I could definitely see price coming back to down there, back to those zones. It's not showing too well here, but you can just see it. I do see price going back to these levels, yeah.
On the other hand, if you
It's a matter of
make mistake
when.
in the other direction and you let this drag on, then it's a year or two down the road and you're realizing inflation behaving the way it can, you're realizing you didn't actually get it, you have to go back in. By then, the risk really is that it has become entrenched in people's thinking And you know, the record is that the employment costs, the cost to the people that we don't want to hurt, you know, they go up with the passage of time.
I can see that
That's
happening,
really
though. I do
how
expect
look at it.
Bitcoin to
So,
go back to 19.3K.
that isn't going to change. What has changed, though, you're right, is we're farther along now. And I think as we're farther along, we're now focused on that.
Bitcoin
you know,
heading back up.
What's the level we need to
Retesting
get to rates?
20.6,
And, you know, I don't know what we'll do when
possibly.
we get there, by the way. You know, it doesn't, we'll have to see. There's been no decision or discussion around exactly what steps we would take at that point. But the first thing is to find your way there.
Thank you. Chris Rugaber at Associated Press. Just to go back to housing for a minute, you mentioned the impact that rate increases have had on housing.
I want to hear more about
home
housing,
sales are down
to be
25%
honest.
in the past year.
When is the
and
housing
so
market
forth,
going to
but,
dump?
None of this is really showing up, as you know, in the government's inflation measures. And as we go
Bitcoin
forward,
pushing up.
Private real-time data is clearly showing these hits to housing. Are you going to need to put a greater weight on that in order to ascertain things like whether there's over-tightening going on? Or will you still focus as much on the more lagging government indicators?
I do want to hear more
So
about
this is
housing.
an interesting subject. So
Bitcoin pushing back up
I'd
here,
start by saying, I
testing
guess, that the measure
20.5.
that's in the CPI and the PCE, it captures rents for all tenants, not just new leases. And that makes sense, actually, because for that reason, that conceptually, that's sort of the right target for monetary policy. And the same thing is true for owner's equivalent rent, which comes off of, it's a reweighting of tenant rents. The private measures are of course good at picking up the at the margin, the new leases. And, you know, they tell you a couple things. One thing is, I think right now, if you look at the pattern of that series of the new leases, it's very pro-cyclical. So rents went up much more than the CPI and PCE rents
Bitcoin
did.
testing
And now they're coming
20.6
down
again.
faster.
Coming back
So
up.
the implication is that there are still, as non-new leases roll over and become and expire, right? There's still in the pipeline, there's still some significant rate increases coming, okay? But at some point, once you get through that, the new leases are going to tell you, what they're telling you is there will come a point at which rent inflation will start to come down. But that point is well out from where we are now. So we're well aware
still
of that,
very
of course, and we
hawkish,
look at
guys.
it. And but I would say that in terms of what the right way to think about inflation really is to look at
So we won't see a pivot,
the
possibly
measure that we
even,
do
guys,
look at,
till
but considering that
another
we
3-4
also know,
meetings, maybe?
that at
Basically
some
what he's
point
saying.
you'll see rents coming down.
Definitely not the next one, so.
And just a quick follow. It looks like stock and bond markets are reacting positively to your announcement so far. Is that something you wanted to see? Is that a
For now,
problem?
they're reacting well.
How much that might affect your future policy to see this positive reaction?
You know, we're not targeting any one or two particular things. You know, our message should be, what I'm trying to do is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates before we get to that level of interest rates that we think is sufficiently restrictive. And putting that in the statement and identifying that as a goal is an important step. And that's meant to put that question really as the important one now going forward. I've also said that we think that the level of rates that we estimated in September, the incoming data suggests that that's actually going to be higher. And that's been the pattern. I mean, I would have little confidence that the forecast.
But guys, what's very interesting is, do you guys remember how there was this whole narrative going around that pivot is here? Who spread that narrative and why? Just remember how we talked about elections and midterms. Obviously, there was no pivot in sight, so manipulation. The pump was manipulated for sure.
Table of the last 12 months of 12-month readings, and there's really no pattern there. We're exactly where we were a year ago. So, okay. So I would also
All right,
say,
bro. See you next
it's premature to discuss pausing.
Have a good night.
And it's not something that we're thinking about. That's really not a conversation to be had now. We have a ways to go. And the last thing I'll say is that I would want people to understand our commitment to getting this done, and to not making the mistake of not doing enough, or the mistake of withdrawing our strong policy and doing that too soon. So those, I control those messages.
Yeah,
and-
so
and
same
that's
message
my job.
basically from what we're hearing.
Edward Lawrence with Fox Business. Thank you.
If you guys
Mr. Chairman.
can
So
also like the
how
stream.
big of a headwind is all the fiscal spending to what the Federal Reserve is trying to do to get inflation back to the
So
2%
Bitcoin
target?
trying to break above this area again, but we'll see if it's able to.
In theory, it was a headwind
guys.
this year, but I do think the broader context is that you have households that have these significant amounts of savings and can keep spending. Even in, so I think those two things do tend to sort of counterbalance each other
I
out.
think I'm gonna
It
go ahead and
appears-
close out the stream here, guys. But just to recap, basically what we expected, guys. But what I want, what we really should be thinking about, guys, is remember the whole time this narrative of Bitcoin, federal bank pivot is coming. Remember this whole narrative, guys. It just shows you that this whole price movement was manipulated, and I'm even more skeptical now. But if he would have came out and said, okay, maybe the next meeting we can start to do we can start to lower rates a little bit and start talking about a pivot. But he said it's not even in sight, guys. He said that things are still going to have to keep quantitative tightening. He said that we are still going to have to keep at this, very hawkish. So it just, this whole narrative of pivot is coming, and we're going to start to see, I think we're going to have to see interest, inflation still be an issue and interest rate hikes for a good while, guys. It looks like it's going to be a good while before we can finally start to see the Fed start to loosen up. Just for anyone that doesn't understand, people who are new, just anytime they do these meetings, guys, they are trying to, squeeze the economy, right? They're trying to take away, for example, just going out and applying for a loan or a credit card or wanting to buy a house, a mortgage, right? All-time lows right now, and that's what they're trying to do. They want it to be very difficult and hard to borrow money, okay? So that's why we're seeing the 30-year fixed mortgage rates going all the way up to like 7.5%. Crazy, guys. These are crazy numbers. And it just shows, whoever put this narrative out about a pivot, I'm not sure, but now we know. Elections are around the corner. Makes good sense. So I wouldn't be surprised here, guys, in the next 24 hours if this thing just totally came crashing down. Okay? Now, could we see a push up to grab some more liquidity? Yes, we could. But it just, it gives me, this told me what I needed to know. He literally told them, they were pressing him, right? Around like 7-8 times they asked the same question, right? Will we see any slowdown? Will we see some loosening instead of tightening? And no. He made it very clear, no, that's not around the corner. So December, we could see another 75 basis points. Now, keep in mind, he knows what he's doing. He could be playing the mental game as well. So he could be saying this, guys, because keep in mind, his goal, again, is to keep things tight, right? He could be saying these things, and the next meeting, we see a complete switch. This is all mental, and he knows what he's doing. Powell isn't stupid, but just keep that in mind, guys. So we're going to continue to watch this, but I guess that's all for now. Thanks for joining the stream. I think he's pretty much done talking. But yeah, like the stream if you can, and we'll see. Possibly new video probably tomorrow. And it's what we expected, right? We expected this. We expected some crazy price movement leading up and settling down now. Probably next few hours I'm going to be watching for price to start heading down. But I'll keep you guys updated on that. But thanks for joining the stream, guys.